Welcome back to the channel. Today we're conducting an in-depth analysis of CrowdStrike's latest earnings report and future market trajectory. With significant price action and evolving analyst forecasts, there's much to discuss for CRWD shareholders. Before we break down the charts, please like this video and subscribe for more professional market updates. Let's dive in. We begin with CrowdStrike's current market performance on the NASDAQ. As of the latest data, CRWD is trading at $429.64, showing a strong upward move of 4.40%. The volume is incredibly high at over 3.5 million shares, indicating intense institutional and retail interest. Looking at the 52-week range, the stock has traveled from a low of $298 to a high of $566. The current price level suggests a significant recovery from its yearly lows, though it remains below its peak. This robust green day on the charts reflects a positive reaction to the underlying financial data we are about to examine. For a high-growth cybersecurity leader like CrowdStrike, this type of price volatility is common, and understanding the momentum within this 52-week bracket is essential for evaluating its current valuation and future potential. Turning to the earnings per share chart, we see a company working through a period of significant fluctuation. The dark blue bars represent estimated EPS, while the light blue bars show actual reported figures. In the first and fourth quarters of 2025, the company faced challenges, but the second and third quarters delivered definitive beat results, indicating moments of strong operational execution. For the fourth quarter of 2025, the reported figure was slightly negative against a positive estimate, marking a point of caution. However, looking ahead into 2026, the forecasted trajectory is one of aggressive growth. Analysts have set targets that climb steadily from the first quarter through the end of the year, with Q4 2026 estimates reaching toward their highest levels. This projected ramp-up suggests that the market expects CrowdStrike to overcome recent hurdles and reestablish a clear path toward consistent profitability as it continues to dominate the enterprise security landscape. The quarterly earnings surprise table provides a granular look at the recent volatility. For the quarter ending October 2025, CrowdStrike reported a loss of 2 cents per share against a consensus forecast of 7 cents, resulting in a negative 128.57% surprise. This followed a massive 89.47% positive surprise in July and a 17.86% beat in April. The year started with a very difficult January report, which saw a negative 600% surprise. These wild swings in the percent surprise column highlight the difficulty analysts have had in modeling the company's performance over the past year. Investors often look for stability in these surprises, and the recent negative turn in October is a signal that the company is currently in a state of flux. Seeing how the company navigates these surprises in the coming year will be critical for restoring long-term analyst confidence and stock price stability. Looking forward at the quarterly earnings forecast, we see the specific targets analysts have set for 2026 and beyond. For the quarter ending January 2026, the consensus EPS forecast is 0.2. Interestingly, the high-end estimate sits at 0.34, while the low end is at 0.16. This range narrows significantly in the April and July quarters, with consensus estimates of 0.11 and 0.17 respectively. However, by January 2027, the consensus jumps to 0.32. Notably, the revision data shows zero upward or downward revisions over the last 4 weeks across all these quarters. This lack of movement indicates that analysts are holding their current positions and waiting for new data before adjusting their models. This wait-and-see period is common before major announcements as the professional community seeks more clarity on CrowdStrike's ability to hit these future targets amid a competitive cybersecurity market. The long-term yearly earnings outlook provides a broader perspective on the company's recovery story. For the fiscal year ending January 2026, 18 analysts have reached a consensus EPS of 0.21. However, the expectations for the following year are much more aggressive, with the consensus quadrupling to 0.89 for January 2027. By January 2028, the forecast continues to climb to 1.36. The spread in these long-term estimates remains wide, with the high-end forecast for 2027 reaching nearly $2. This suggests that while there is a general agreement on the upward direction of earnings, there is significant disagreement on the scale of that growth. For investors, these multi-year projections are the core of the bullish thesis, suggesting that the company is expected to significantly scale its profitability over the next 3 to 4 years as it moves past the quarterly volatility seen in 2025. The change in consensus chart visually tracks the stability of analyst expectations over the past month. For both the full fiscal year 2026 and the upcoming January 2026 quarter, the bars remain remarkably flat. Comparing the one-month AGO data to current estimates, we see almost no variation in the height of the bars. This visual consistency mirrors the revision data we saw in the forecast tables, confirming that analyst sentiment has reached a plateau. While there is no positive momentum driving the bars higher, there is also no negative momentum pulling them down. This stability indicates that the market has fully digested the recent earnings data and is currently pricing in the current consensus without much debate. For a stock that has seen massive surprises in the past, this period of stable consensus can be seen as a necessary consolidation phase before the next major market move. The estimate momentum summary provides the final text breakdown of this stable sentiment. For the fiscal quarter ending January 2026, the consensus EPS forecast has remained unchanged at 0.2 over both the past week and the past month. Similarly, the full-year forecast for January 2026 has stayed steady at 0.21. The summary explicitly states that none of the analysts raised their forecast and none lowered them during this period. This unanimous hold on current estimates is significant as it shows a temporary pause in the shifting of analyst models. Estimate momentum is typically a leading indicator for stock performance, and the current zero momentum state suggests that the stock may trade in a range until the next catalyst arrives. For CrowdStrike, this suggests that the professional community is satisfied with current projections, but lacks the new information needed to justify a more bullish or bearish stance. Finally, we look at the raw number of estimates changed to confirm the breadth of this consensus. The table shows a string of zeros across the board, 0 upward revisions and 0 downward revisions for both the January 2026 quarter and the full fiscal year. This absolute lack of movement among the 18 analysts covering the stock is a rare occurrence and underscores the current holding pattern in the financial community. It suggests that all 18 professionals are in agreement that the current EPS targets are appropriate given the information available. While it doesn't provide a buy or sell signal through momentum, it does provide a sense of established equilibrium. For investors, this tally serves as a final confirmation that the market is waiting for the next earnings report to provide the clarity needed to move these numbers in either direction. The stability here sets a firm baseline for the company's 2026 fiscal performance. In conclusion, CrowdStrike's earnings data shows a company in a stable but critical transition phase. While 2025 brought significant volatility and surprises, the multi-year forecast remains highly optimistic for 2027 and beyond. The current lack of analyst revision suggests a market waiting for the next growth catalyst. Thank you for joining us. Don't forget to like, subscribe, and hit the notification bell for more market breakdowns. We'll see you in the next analysis.